Hello and welcome to a new video series on fundamental analysis. So fundamental analysis is a must-known and acquired skill for any investor. So this is an 8-episode series. In this, we'll be discussing about the introduction part, the difference between fundamental analysis and technical analysis, and how to read annual reports and how we can get inputs from annual reports on selecting certain stocks, how we can read the profit and loss statements, how to analyze the P&L statements. Along with that, very important 3 P&L ratios that also we will be discussing, analyzing cash flow statements. Towards the end, we will be discussing some deep dive into the forensics of reading and analyzing balance sheet as well as the company submissions to the exchange and media. So stay tuned for the first episode. I hope all of you know how to play cricket, right? For Indians, that's a must-know skill. We are very much fascinated about Sachin Tendulkar, Virat Kohli, MS Dhoni, etc. etc. Okay. Assume that you are the captain of a cricket team. How do you go and choose the correct player for your team? What all will be the parameters of selection? You probably may look for the player's past performance, that player's strike rate, that player's average, and even maybe his conduct on the ground. Whether he is well behaved, well mannered, or his attitude is good, whether he will listen to you, listen for your suggestions or instructions. Isn't it? You can take these 4 parameters. Just similar to this only, we are doing the fundamental analysis. In simple terms, you can say the fundamental analysis is a technique that is used to determine the value of an asset. It focuses on many underlying factors that affect the company's future aspects and its actual business. Fundamental stock analysis basically helps us to analyze the economic and financial well-being of a company. Or in other words, you can say it helps us to determine if the price of that particular stock is justifiable with its actual value. The price is what you pay to get that, while the value is what you get. I think this is told by Warren Buffett. Let's take an example to understand it better. For example, we shall take the shares of Ashimoto. So the date is March 13th, 2020, and the share price for one share, right, for Ashimoto that day was rupees 17,672 rupees. By April 3rd, 2020, the price dropped to 12,680 per share. Looking at the numbers, it may be common to conclude that the company is in a good investment choice. However, take a look at how its share price bounced back in the month of June. In the month of June, the price increased to 18,436 rupees per share. So how it happened? The only answer is that particular stock was fundamentally very fit. It had the capability to bounce back. Next, let's have a look on how important fundamental analysis if you are looking for an investment, especially if you are going to have a long-term investor. Next, let's have a look on the types of fundamental analysis. Fundamental analysis can be classified into 2 as quantitative analysis and qualitative analysis. So in order to arrive at an intrinsic value of a stock, intrinsic value means that is the actual value of a stock. So rest of the things are premium. If a stock is more than its intrinsic value, we can say that that stock is costly or expensive. If some stock is less than its intrinsic value, then we can say that stock is cheaper. So it's always ideal to buy cheaper stocks because its intrinsic value is higher. So in the case of quantitative aspects of fundamental analysis, these are basically the details that can be quantified as numbers, like the company's revenue growth or profit or debts or assets, these kind of things, which can be expressed in terms of numbers. When it comes to qualitative aspects of the company analysis, in that we will discuss about the goodwill of the company, the patents the company owns, and the managerial quality, etc., etc., which cannot be expressed in terms of numbers, will be called as qualitative aspects of the company. So in short, a company with strong fundamentals can deliver good returns over a longer period. And how do you figure out which company is fundamentally strong? You can do this by fundamental analysis of the company. As we have seen, you need not be a professional analyst to get started with fundamental stock analysis. You only need to learn the right techniques. And for that, we are discussing all those things in the coming sections. So before we wind up the session, let's quickly recap what all things we have discussed till now. So fundamental analysis is the technique that is used to determine the value of an asset. So it basically focuses on many underlying factors that affect the company's future aspects and actual business. Fundamental analysis helps you to analyze the economic and financial well-being of an entity. And the most important thing is, price is what you pay, while value is what you get. And a fundamentally strong company can give you better returns over a period of time. So you need not bother about the price fluctuation of a fundamentally strong company. So that's all for now. See you in the next episode. Now miss the next episode. That is the second episode of Fundamental Analysis. Till then, take care. Bye from Anup.